Hello, everyone. Good morning and welcome to COL's Mid-Year Philippine Market Outlook. I'm Charles and I'll be your host and moderator for today. Please allow me to briefly pause here as we share some important disclaimers. Okay, as we move into the second half of the year, it's clear that the first 6 months have kept us on our toes. We've all had to navigate a highly dynamic market environment, shaped by everything from global geopolitical events to a number of domestic headwinds that continue to influence our local market. But as we've seen time and again, periods of market recalibration also create selective opportunities for those who remain prepared. Today is all about looking ahead. For the rest of this session, we aim to share our core views for the second half of the year. We'll break down the major catalysts and risks that we are actively monitoring and discuss where we're seeing the biggest opportunities in the market today. We'll start today's program with a moderated discussion of our fundamental and technical views. This will then be followed by an analysis of your most requested stocks. And finally, a Q&A segment where we'll answer both your advanced questions and your live questions, which you can submit through the Zoom Q&A tab. So I invite you to do that if you wish. Okay, so let's get right to it. Here to share their views on the market, let's all please welcome COL's Chief Equity Strategist, April Tan, and COL's Chief Technical Analyst, Juanis Barredo. Thank you, April and Juanis, for joining us once again today.
Thank you, Charles, and welcome to all the attendees. Thank you for attending our session this early on a Saturday morning.
Good morning, everybody.
Saturday morning. Okay. To start off, I'd like to address the first question to April. So looking back at the start of the year, I remember we were cautiously optimistic. So we did have a strong run the first 2 months of the year, but after that, obviously everybody knows that the Iran war started, triggering a whole list of challenges for the Philippines and dragging the local market down for the rest of the half. So now we're in July, and I believe in your latest Calling the Shots report, you mentioned that you're turning more constructive on the Philippines once again. Could you explain the reasons for this optimism?
Okay, so it's good that you highlighted certain things like our positive outlook during the start of the year, followed by, of course, the unexpected. I don't think anybody, anticipated that we'd have this Iran war. I think I have like a slide that shows what happened and how the market performed. So anyway, let me just check. So from January to February 27, actually the market was up by 9%, no? And then when the war happened, during the height of the war, because of course this war also had phases, it was down closer to 10. And then when they had a ceasefire, April 8, the market just moved sideways, believe it or not, up to say June 11, and then or the signing of the MOU for the peace deal. And after that, the market rallied by 5.7% in a short period of time, less than a month. And then I guess the question is, this market outlook kasi, di ba, parang we were talking about it, and the surprise, I guess, a few days ago, there was a re-escalation of tensions, di ba? Where the US bombed, Iran bombed certain commercial ships, and then the US retaliated by bombing certain locations. So, the question is like, I guess, why are we, or are we still constructive? And, yes, we are still constructive. So let's look at the next slide so I can have like a similar or a better discussion of what happened. I think, let's take away the war and focus on what really matters, why we even care about the war. And I think it's oil prices. And notwithstanding the re-escalation of the conflict, we are still seeing oil prices um, remaining low. And aside from that, one of the things I'm quite excited about for the fourth quarter is the GCash IPO. And of course, as always, the very cheap valuations. Um, yeah, so those are the main reasons. So should I already talk about, oil prices and the reason why it's a very positive, Charles?
Yes, yes, go ahead.
Okay, so let's talk about oil prices. So, you know, yeah, so one of the things, in case you didn't realize it, Brent crude, which is the crude oil, is only 5% higher, even with the renewed tensions, as of yesterday ito. Brent crude is only 5% higher than pre-war level. That's the raw material. And then the means of Platts Singapore, which is the basis for the prices we see in the pump. Um, that's just up by 44%. You might say, wow, 44 is still high. But remember at one point in time in I would say March, early April, it was as high as 160%. So more than double. And it's now significantly lower than that. And the expectation is, of course, if crude oil flows continues to flow, then we'll slowly see it go back down to pre-war level. And that is very significant. Let's go to the next slide this time. So remember, when the war first erupted, I came out with a piece saying, usually it just goes up. Oil usually goes up sharply, but after a few months, it goes down. Okay. And then after thinking about it, I was a little bit worried about the situation of the US-Iran war. I mean, okay, so look at this, no? During the past three wars, Gulf War, Iraq, Russia, Ukraine, you would notice that the magnitude of the rise, or from the low to the peak of oil, it would only last for around 2 to 3 months. No, and then after that, you would see 6 months later, it's oil is usually flat to down compared to the start of the war, no? Its oil price is down, and right now it's like down 5.3%, no? And then 12 months later, usually it's significantly or it's lower na than the start of the war, no? So that's the main message of this slide. And let's go to the next one. So what does this mean for the PSEI? Well, again, knee-jerk reaction when the war begins. You'll see the market going down, especially while oil prices are rising. But this correction, although the magnitude is significant, you will see that it would also last around or the magnitude, to get the full magnitude, you'd see it in around 2 to 4 months also. And then 6 months later, 12 months later, well, although the Philippines is still negative compared to the start of the war, I'd like you guys to focus on the last two columns, where if you compare it, quite high. And right now, we're actually around 8% higher compared to the low that we saw this year. And really, oil price is, I think, a major, or the major indicator that determines a lot of things. Can we go to the next slide? And by the way, the US market didn't even go down a lot this time. Well, it went down for 1 month, but even though things were, or the war was still quite hot, you can see that the US market still went up. It like totally ignored the war. It remained resilient, and is now up substantially for the year-to-date period. So let's go to the next slide, you know, where I talk about the reasons why oil price is really very significant. Because if we think about the issues related to oil, well, ano bang pinag-usapan today, mga worries, rising inflation, the depreciation of the peso, higher interest rates, consumers walang gana, 'di ba? Businesses don't want to expand, then weaker profits. They're all tied to this oil price. But then if you see oil prices going down, then there is less worry about inflation. And since companies and even people don't have to buy or shell out as much money for the same volume of oil, it should help the peso appreciate. And of course, with inflation going down, less pressure for interest rates to go up. So most likely interest rates can go down. And then again, with lower inflation, lower costs, uh, consumer business confidence improves, they spend more, and then this would lead to higher profits. So really, oil is really very critical to everything. And then I just want to highlight certain things because there's so much pessimism. Let's go to the next slide. So in fact, notwithstanding all the negative headlines, there are signs that businesses are actually becoming already more optimistic. And this is more of looking at oil prices. This round, I think we saw the peak around April. So on a month-on-month basis, oil has been going down. And, you can see that business confidence is in fact already improving. So they are saying that they're expecting more business activity, and they're saying higher consumer spending. Okay, and then they are actually planning to hire more people, which is in a way kind of surprising. And this is also supported in the S&P Global PMI numbers. Let's go to the next slide where we talk about it. So for the S&P Global PMI, we had a negative print for the month of April. But for May and June, they saw a rebound. So anything above 50 indicates an expansion. And, I lifted these straight from the report itself. And they said that, they're seeing growth in output and new orders for a second month straight, and renewed rise in purchasing activity, and companies actually hiring people. And again, of course, this is largely due to falling oil prices. So yeah, I guess that's it.
Yeah. Yeah, so April, I have a question because maybe a lot of our viewers might be wondering. Of course, you highlighted that oil price is almost like back to pre-war levels, just slightly above. And in fact, we've seen the same case three times before, right? In the recent wars that we've had. But at the same time, maybe we still hear news, right, about about Iran and US like attacking or bombing each other uh, almost every day, even as recent as like overnight, like this past day. So I guess my question is, how do we make sense of it? I guess does it just mean that like oil markets are very resilient, or is it a case of markets being always assuming the worst at the start? Because we saw in all four cases, right? Oil prices rallied like 30, 40, 50% each time. But each time, after 6 months, it's almost flat to even down in some
Yeah, I
cases. So
think
how do you make
everybody was
sense of this?
anticipating the worst. And I think one of the things that happened, okay, because remember during the start, I already said, 'di ba, when the war began, I said this usually lasts 2 to 4 months, and then after that it goes up, so it's a buying opportunity. But then I kind of changed my mind because realizing how significant the potential disruption would be, because this time we're talking about a 20% disruption in the supply. But I think one of the surprises we have for this round is that China, they kind of, because China doesn't really disclose how much reserves they have. So apparently they have around 1.4 billion barrels of oil. And because of the elevated prices, etc., they were tapping onto these supplies, and you know, because of course we also saw a lot of increasing adoption of EVs, and EVs out of China are so cheap. So the combination of China importing less oil plus yun na nga, the demand destruction caused by all these initiatives, that's 5 million barrels less in terms per day. Kasi the deficit is around 20 million barrels a day, no, because of the Hormuz, no. And then of course they have certain offsets like the Saudi East-West pipeline, you know, yung dumadaan sa iba. And then aside from that, we have the release of the SPRs, petroleum reserves of countries, and also of you know, private companies and the different countries. Yun. So yun yung mga surprise na nangyari. Okay, that's why it became more of a balanced type of oil's demand supply situation for oil. So yeah, but that said, it really is I do admit that this is not super sustainable, or medyo questionable pa rin. Kaya siguro natatakot pa rin mga tao if you know, tensions reemerge. But let's go to the next slide where I talk about reasons why pwede rin naman na, or there are incentives why the US and Iran would want to pursue a peace deal. Okay? Because for example, for the US, I was actually kind of surprised that they gave such a good deal to Iran. Because really, if you look at the details, parang it was really very favorable for Iran. First of all, the Americans really, di ba yung mga surveys are coming out and they're saying that the Americans really weren't pro, or they weren't for the war that is
Yes.
going on. That's why, yeah. So, and then the oil prices are going up. So that's not good. November, we have a midterm election where the lead of the Republicans right now is so thin. And then, of course, there's a possibility that the Democrats would come in. So they don't want that to happen. And, you know, there are a lot of people are talking about how Trump is making money out of financial markets. And if financial markets don't do well because of rising oil prices, that is also not something that Trump would want to happen. That he's very sensitive. Diba? Kaya nga may tako, diba? Trump always
Yeah.
chickens out. They always talk about that. Anyway, and for Iran, I mean, think about it. They've been suffering from sanctions for so many years, rising inflation, kawawa mga tao doon. So, in a way, they also welcome a peace deal. They just don't want to look like they are defeated at this point. That's why if the US is the one that reaches out for a peace deal, I don't think they would say no to it. But maybe they just want to take advantage of Hormuz because that's one of the sticking points, right? They just want to make sure that you know, they take advantage of it or they can control it. That's why they do
Yeah.
these things, no? I mean, both sides have to kind of show that they're the ones in charge, or you know, that's why they have to do these little things. But to
Continuously.
the point of bringing it back to say the March level of aggression, maybe they don't want to blow. So yun, both sides really have incentives, I think, to pursue a peace deal. So maybe we won't see the March level of aggression.
Okay, and hopefully that's the reason why we're seeing some optimism in the oil price, no? Okay, so before we go to your other reasons why you're bullish, no, so let's shift first our focus to technicals. So, Sir Juanis, how have the technical charts evolved since our January outlook, and do you share April's optimism for the second half?
Well, again, hello everyone. As you said, when we were coming from January, I guess I tried to be able to make sense of where I think the market would go into this next 6 month period, and the image you see there was directly taken from what we did in our beginning of Feb outlook. And part of what I forecasted there was that after the market may try to be able to find a rally high, I felt that the market still needed time to be able to come back down and may come pretty deeply down into the range that it had come from. And this was a difficult thing to try to forecast because number one, I didn't know there was going to be a war coming in, and I was trying to understand what would make this market come down after rallying so quickly. And if can I go to the next slide, please? And if you see what actually happened, all right. So this is the updated weekly chart of our index, and sure enough, it did make a break of the little high that we had sometime there in July, and then it fell down uh, almost all the way down, but at least it managed to make a higher low, which is what I was anticipating. Now we're seeing the market attempt to make a rebound. But I think this chart is very important because I think to try to be able to square off where we really are today, remember, we're coming off from a major market low or the low range of a market. There's a very large rectangular pattern that our index has been stuck in for years. And right now, I don't see any incentive for prices to either break below that range or even the high band of that range. And in other words, we're going to see this range continue. But now we're bouncing from the lower end of that particular rectangular range, and that should be able to give us something more to go on in terms of a rally. If we may go to the next slide, please. Now, moreover, this is something I've been tracking for a while, now, a few years now, and I've noticed that three basic turning points would come seasonally into the local market. I've highlighted in circles the different turning points. The green circles would represent turning points between January and February. The blue ones suggesting June to July, and if you notice in the bottom of the most recent swing, we've just finished that June-July threshold, and now we're seeing a counter rally, which is relatively a good one. And that kind of earmarks that this indeed is a turning point. And what seems to be a good prospect for us, at least into the short term, is the next major turning point usually comes between September to October. Maybe could slip even to about a November period, but most of the time it's September and October. So we haven't from today until that time to be able to see this rally try to be able to bring itself to fullness. And hopefully that should be able to keep ourselves in rally mode. But do understand what we're coming from. We're stuck in a big range, and rallies from a very constrained range normally will be quite choppy, or you will see zigzag motions into these particular types of recovery swings. May I have the next slide, please? So going back into the short-term view for our index, that roughly 5990, and that were our 50-day EMA moving average presenting support right now between 5990 and 6060, has held well so far. After the initial gap up we saw, the gap was closed. I normally would rather see gaps kept open to show strength. This was closed, so that means that perhaps the recovery might be more gradual. And at least it does point that we're still eyeing for the next levels of resistance between 6465 being the next level. And hopefully we can stretch all the way up to where that high that you see being, that would be the ultimate rally height, until we back off again and eventually break that high and work to something much higher, which will be closer to the last highs that you've seen, closer to 7,550. Next slide, please. So ideally, the scenario I'm really looking at is I really wish that I am wrong and that we see a much stronger scenario come out, in which case this green line that you see here posted into the index could be a potential action. Although I'm more inclined to see the second scenario, the bluish one you see here, which is more of a gradual upswinging channel where you see prices will gyrate up and down to eventually try to go there, but it might carry the need for this to be able to stretch out over in time. And I will leave a weaker scenario open because, again, we still have to break that 650 area. If we don't, then it's quite possible that your rally could peter off and back off and instead produce a smaller consolidation pattern. But like I said, I'm more leaning for the blue scenario, or the moderated scenario, to come out for that. So ideally that should be able to give us something to go on and give us more of a short-term rally.
Okay, Sir Juanis, you mentioned that you didn't know about the Iran war, which of course I believe you. But I remember that you did warn about, even in our January briefing, you did warn of a potential, correction towards
Yes.
like the June July levels. But my question is, okay, but then Iran war did happen, and which really was a big challenge for global markets, especially the Philippines.
Mhm.
What's your take on the fact that despite that big fundamental reason, markets didn't go to new lows? The June July lows was still higher, right, than the
Yeah.
than our last year's low. So how do you read? Do you read anything into that, or does it imply that we're really close to the bottom,
Uh,
or how do you view that?
First of all, I believe so that we've made the bottom, at least for what we've seen, and we've come from a major bottom we've seen out through how many years now. So it'd be very difficult for the market to be able to break this. Secondly, I think you asked April. One of the conditions she talked about was the sell-off being seen in oil prices, and that helped a lot. I wouldn't know. I mean, if prices had stayed closer to about $90 or $100, that could have changed the structure of many markets altogether. But I think looking at it, that oil prices managed to be able to come down quite steeply from its highs, gave many markets the ability to be able to hold firm in many areas of support, and including ours. And this is the reason why it turned out the way it did.
Okay. So focusing on the last month, no. So obviously June 15, if I recall correctly, like the PSEI like surged 6% in a day because of that was the when the like MOU was announced, no. But ever since it pulled back to around 6,000, that's the like the support. My question is this or like how confident are you that this 6,000 level would serve as the low for the rest of the year? Is it a good support, or could it still go back below?
Uh, I think I painted the third scenario that I showed earlier on would allow it to come back down to the recent lows. But what percentage would I put into that scenario? Maybe about a 20%. I'm more confident on 80% standing that either the blue or the green scenario would likely come out, at
All
least
right.
into the short term.
Okay. Thank you, sir. Okay, going back to April. So you mentioned a while ago about the GCash IPO as a reason to be positive, that you're positive in the market. So how would this be bullish for the market?
Okay. Well, I think, kasi, 'di ba, I think for several years we've been talking about how cheap the market is. The problem is people don't have a reason to buy it. 'Di ba? So we're really derated. So my feeling is, GCash IPO could be the catalyst that will allow this re-rating of the market. Kasi, I mean, in the past, I remember talking about this also, that one of the reasons why people don't want to invest in the Philippines is we don't have a story to tell. We don't have, 'di ba, a tech stock. And that's really what's hot. And finally now we actually and like I've talked about it in the weekly, where I think the PSE will do something to make it part of the index. So if that happens, you'll have a lot of funds that will be interested. I mean, of course, even if it isn't added yet, we'll still have a lot of investors that are interested. Even right now, we see a lot of excitement among investors in investing in the stock. Secondly, well, another problem that the Philippines has been having is, encouraging more companies to list, maybe with the listing of GCash. And of course, if they succeed in raising capital at 30 times PE, and if I'm a tech company that is, profitable naman, fast growing, why not? One of the issues people have about listing in the Philippines is the level of valuations that investors are willing to pay. And if GCash can get away with, say, close to 30 times PE, let's say they finally list at 25 times PE. maybe that would encourage other companies like, Maya to list. So, that would be really something very positive. So we'll have more tech issues there, and, more people would be more interested in buying because you have actually more strong performing stocks in the PSE.
Would you think this could finally encourage foreign funds from coming back to the Philippines after like a decade of foreign outflow?
I mean, I think so. That would help encourage them. Kasi, I think, like a year or two ago, when the market was really weak, one of the conversations we have with the fund managers is that, di ba, sinabi nila, do investors really care about fundamentals? Or, kasi, di ba, the local companies are profitable anyway, but the prices aren't going up. I think that's their point. And one of my realizations, if you really observe how the market is performing, they're not the answer is investors don't buy you if your growth is single digit, especially if it's low single digit. But think about the likes of, say, ICTSI. It continues to go up, notwithstanding the general weakness of the market, because that company has consistently delivered double-digit earnings growth and resilience even with the pandemic. Then, of course, the banks performed really well after the pandemic. And we saw them perform, and then we had DigiPlus at one point in time performing very well. So in other words, it's fundamentals still matter. And foreigners would buy them. I think, okay, when GCash came out with the preliminary prospectus, the EPS growth or the earnings growth was really, I think, very mouth-watering for foreign investors if they can sustain that. That's like a 50-60% CAGR. So if they can sustain that for the next 3 to 4 years, I think the foreign investors will definitely come in and buy them.
Okay, great. Sir Juanis, do you have any thoughts on GCash IPO? And maybe if I can ask na lang, no, because some like the other camp, I mean the more bearish ones, they would say that maybe the IPO, because it's a big IPO, could it suck up like liquidity from the other like current listed stocks?
Yes, in my point of view, I think that's a major concern because we're talking about, do I understand it? That's about a 1.5 billion offering,
Yeah, yes,
dollar
yes.
offering. And um, I'm more worried that if it's not priced adequately and allowing some investors room for an appreciation because of the valuation prospects, and if it's too pricey and prices tend to get stuck, you're going to have a large retail base or even a large investor base that might not be able to unwind some of those funds, and that could sap the strength of the rest of the market because that's quite a really large offering, and you have another one coming in, PLDT. So there might be some challenges coming in, and I noticed these IPOs are coming towards. Do I have it closer to the fourth quarter, April?
Yeah, about October, I
October.
think.
And
October.
that seems to be timing quite well to my turning point.
Okay, let's hope. I'm sure we're gonna be talking about GCash more later on. I believe we have an advanced question about that. So, but for now, okay. So I'll move on first. So one is, from the index level. So you mentioned a while ago the index level. Can we go now to more individual stocks? Where are you seeing strength in the market today?
Well, usually I conduct this review of the market of the index stocks called the tail of the tape, which you can see now here. And despite the rally that we've been seeing into the index, you can see that majority of index stocks are still stuck within a range of consolidation type of trend. And in fact, there's more on the middle to the right than you have to the left, which means there's more uh, consolidating to bearish views than there are on the bullish side. And to me, that's an issue because I need to be able to see more shift from these consolidations into the left side of that category so that it can show more or better impact in terms of following. And given such constraints, that would mean that we would have to be able to take this market one step at a time, because we have to understand there's going to be limited upside, because right now the following is very sporadic with the strong. And many of them seem to be only offering set ranges, and that means that we may have limited space for the rally. Um, so you would have to be really a stock picker in this particular type of market. I mean, you can't just buy broadly. I'm thinking if you probably just buy the index, you could, you'll probably also have some limited percentage upside. So I think here, this is a stock pickers market. You will really want to be able to see which ones can outperform, and try to be able to take advantage of short-term swings whenever it comes.
Yeah, so is it correct? So it seems like the market, although it's improving from the lows, but it's still not yet fully there. I mean, it's not yet broad-based.
That's correct, Charles. And that's why, like I said, stock picking is going to be the name of the game. And you have to take advantage whenever prices shoot up very much in the short term, because more likely they will come back as they try to align to the consolidation they're currently in.
Okay. Okay, great. Okay. Moving back to April. So you mentioned you're optimistic. Could you explain some of the risks to your view, to the optimistic view?
Okay, so earlier on, I already talked about the risk on oil. I think the second risk that we have is the bearish, oh sorry, the hawkishness of the Fed and the BSP. So I think one of the main issues is the Fed. We know, for example, during the last FOMC meeting, they adjusted the dot plots, no, their projections of where interest rates would be for the rest of the year. They adjusted it upwards. And then Kevin Warsh was kind of, the new Fed chair. He sounded very hawkish, and then he said, "I'm not going to provide any guidance," diba? But anyway, after that FOMC meeting, although there was no change, the expectations for a rate hike increased. And of course, yun na nga, that in a way caused the peso to weaken. You can see that the dollar strengthened on the left side, and then the peso weakened. And even our interest rates actually went up. Let's go to the next slide because I want to talk about the BSP as well. Kasi, di ba, in a way, since oil prices are going down, we're seeing the headline inflation. For example, after peaking at 7.2%, actually the past 2 months for May and June, surprising on the downside versus consensus, it's still within the BSP expectations, pero it's below consensus the past 2 months. And of course, decelerating, which we would view favorably. But for the BSP, they're more concerned about this, the core inflation, which they see continuing to accelerate. So the BSP is very worried about, I guess, second round effects or inflation being entrenched. Because we don't want that to happen, price components. But my view on that is, the labor market is not very strong. Let's go to the next slide. So for the US, as far as the US is concerned, notwithstanding what they're saying that, oh, the labor market is strong, etc., etc. Because ang problema kasi sa US, if you look at the unemployment rate, it really is very low. But the reason why it is very low is because a lot of people are discouraged from looking for jobs, to the point that the labor force is actually shrinking, or less people looking for jobs. That's why bumaba yung unemployment rate. But if you look at this non-farm payrolls, you can see very clearly, this is since you can see 2021, 2022. It was a lot higher, and that was the time where we had that persistent persistently high inflation. And you compare it to today, sobrang baba, di ba? So that's not a sign of a strong labor market. And usually you would have a wage price spiral only when the labor market is strong and people really need, or companies really need to hire people to the point that they're willing to pay more. And when people have more money, they're gonna pay more also to buy the products that they want and the products that they need. But if they know they can't find jobs, they can't quit, 'di ba? And if things become expensive, they're just not gonna buy it, 'di ba? So mawawala yung pricing power ng corporates. As far as the Philippines is concerned, let's go to the next slide. We're also not very strong. If you look at the domestic labor market, we're also suffering from a decline in the labor participation rate. So for this is a 2026 versus 2025 number. So you can see there are also less Filipinos looking for jobs. Okay, consistent every month because I prefer looking at year-on-year changes rather than month-on-month because they may mga seasonality siya. But if you look at this, I think this trend started like last year, but if you look at it this year, mas consistent na talagang nagwiwika ng domestic labor market because you can see on a year-on-year basis, the unemployment rate is actually picking up. And it has been picking up consistently during the past 5 months. So this is not exactly a picture of a strong labor market. So the same phenomena most likely will happen, where, yeah, companies will increase prices because the raw material costs are going up. But then, you know, the people or, Filipinos aren't going to accept it. They have to make tipid, so most likely they'll just buy lower cost alternatives or they'll buy less of something. I think the biggest question we have right now is the wage adjustments. Like the NCR, we had a 12% wage adjustment, which is huge. 'Di ba? So is that gonna cause a wage price spiral? The thing is, the wage increase was more of a response to the one-time adjustment in oil prices. Most likely it's going to be transitory. It's going to be a one-time thing. And it wasn't really triggered by the tight labor force. It's more like a response to the high prices. That's why I'm feeling it's going to be a one-time increase. Then after that, it's not going to cause higher prices. And then higher prices will cause another round of wage increases. I think it will be controlled. So that said, maybe the interest rates aren't gonna be as big of a problem or for the Philippines anyway. But I think there are other risks. So should we talk about it, Charles?
Yeah, go ahead. You can finish the risks.
Okay, so let's go to the next risk. Okay, the headlines. This one I'm less worried about that. Kasi pag nagbabasa ka ng dyaryo, di ba yung mga ibang tao, they don't wanna read the news anymore or look at the headlines because let's read the headlines. Infrastructure spending falls 52%. Philippines got GDP growth outlook. Moody's, di ba, reduced banks, and then I think last week we had S&P also, and then other banks cutting their growth forecast, etc., etc. And I agree they're very negative, but you think about it, it's mostly noise because these are all backward-looking indicators. I mean, for us, for example, as analysts, we see the bad first quarter earnings. Well, obviously, we adjust our forecast downwards. But the thing is, in the market, we really have to be more forward-looking. We have to look at where oil prices are. I mean, yeah, everything was bad because oil prices were high. And of course, we have to adjust to that as analysts. But going forward, if oil prices go down, that's good. And we have to remind ourselves that markets typically move higher when conditions become less bad, or it's all relative to expectations and not when everything is perfect. Okay, and then next, I think we have to look at Well, anyway, I just wanted to highlight pala, before we talk about the markets, in the other countries, which I believe are the risk, I want to already highlight the cheap valuations of stocks. So usually, 'di ba, I would do a 10-year PE band, and this time around I said, let's do a 20-year PE band. Okay. And right now we're doing 9.7 times. The reason why I did a 20-year PE band is because I want to also include the time of the global financial crisis. Okay, so if we look at this, you can see that 9.7 times relative to the global financial crisis, we're actually matching the low that we set there. Okay, which just goes to show that how cheap is cheap. It really is very cheap, no? The market is really very cheap at this point. And then another thing I want to highlight is the dividend yields. Okay. I mean, I've been investing in the Philippine stock market for more than 20 years. And I've never seen a situation where dividend yields are so high to the point that, I mean, if I were a long-term investor, and the potential upside to my stocks are so
Yeah,
high,
yeah,
and
obviously.
then, then I get paid pa to wait, or it's like an insurance policy. Okay. As long as I know I don't need the money, and then, um 'di ba? I have a high level of dividend pa, like I'm getting paid to wait, then it really is a very attractive thing for an investor. 'Di ba? Worst case scenario, I collect my dividends. Best case scenario, I see capital appreciation plus I collect my cash dividend. So yeah. And then but then, I think the last one, for the risk. Okay, let's go to the last one. Okay. Let's go to the next slide for the risk. I think it's the global markets, the volatility. This is something that, I know I've been talking about this for a very long time, and I don't know if it's gonna happen, but this is something that we cannot ignore. That the US market really is very vulnerable to a correction, and it has been for many years. And it could still continue to go up. Just want to highlight that there are reasons why the risk is still there. Especially right now, no, aside from the expensive valuations and the concentration on a few tech stocks, um, there are growing signs that there is a potential AI over investment happening right now. And then again, the thing is about, okay, before we've already had this K-shaped economy. So just to point out how bad things are right now, if you listen to podcasts where they talk about the US economy, um people are actually saving. They're complaining also about high costs. But the thing is, hindi sila nagtitipid because people are looking at the stock market. They're The portion of investors that are investing in the stock market is so much higher. And they're seeing, okay, I'll just spend more because I can afford, because the market is so strong, di ba? So to put things into context, like the savings rate in the US historically was 8%. So they save $8 per $100 earned. Now it's down to 3%. Okay, because they're looking at their portfolios and it's making so much money. And we know how, right now so many retail investors are investing in US markets. So I think that is a major risk because it means that the underlying US economy is not very strong. On the AI overinvestment, we know naman that the US economy is so resilient because of all these investments that are going to all these data centers, AI related investments. And if that capex actually um, goes down, or doesn't, it ends, then the US economy isn't as strong, right? So I think those are the risks. There Earlier this year, there were talks that OpenAI and Anthropic are planning to list. But now, di ba, alam naman natin na OpenAI has delayed its IPO. And the question is, they're not profitable. So can they sustain that level of capex if they are not able to push through with the IPO? So that's another concern. Yeah, so those are the risks. But this one, like I don't know what will happen, but it could also continue to go up.
Yeah, okay. Thanks, April. So up several important drivers so far. No? So I'd like to request at this point some insights on what the charts are showing. So the first one maybe I'll ask about is the oil. So what's the chart of oil looking like?
Right. So, well, oil is still in a structural downtrend. However, it is bouncing from the low point of two channels, and this is the reason why it found some room to try to be able to make a rebound. I think even if you do get a short-term rebound in oil, it seems quite pinned downwards already. So I think you get some pressure off maybe $80 at the maximum in terms of a rally, and still attempt to be able to head downwards. So I would assume that that should continue to lend support to our market.
Okay.
Um,
How
yeah, if I can cover the rest, like
okay,
even
okay,
gold
sure.
prices have actually come down, and I guess the reason for that really is because we've been seeing a stronger dollar, which goes against the movement of gold. So last year gold was in ecstasy. Every gold miner up there was going up very, very sharply, and then a turnaround took place sometime in March, and when the war began, and then it went cascadingly downwards, and it has not changed its trend yet. So unless it can break over 4,340, gold will continue to get pinned down into this receding channel, and can only have hopes of a stronger rally if that major resistance point of 4,330 can be broken.
All right, thank you. How about in terms of the peso dollar movements?
All right. So looking into the dollar, I mean, this is the reason why gold's been relatively weak. Um, the US dollar has managed to be able to come back. I would think for two basic reasons. I'll talk about bond yields in a little bit, but I think the dollar managed to gain some strength because of a rally in yields, in US bond yields. And second, because I think the US is doing everything in its power to maintain the value of the petrodollar. And this is, I think, the underlying reason why they're getting involved in so many conflicts to try to be able to keep that petrodollar value very much in place. And so far, it seems to be doing its job. And right now, the dollar punched out of major resistance just recently, and it's now handling a little bit of a correction, but it's still standing over support. So potentially, this could still climb. I will put major support closer to about 100.5 into the dollar index, or even 100.11. Only in the break of those would I see more of a heavier correction to the dollar. And the impact on the peso obviously was not good, because we did see some devaluing movements earlier. But so far, we managed to be able to go sideways for the meantime. But still, I edge on this still. But I'm really hoping that this new rectangular pattern that we've seen so far can hold. That way, it will not contribute to any softness back into our market.
All right.
And if I could just have the yields chart,
Yeah,
place,
sure,
please.
sure.
All right. So in terms of the yield chart, if you notice that we've had both have actually been breaking off consolidation patterns that they've had. So normally you're looking at oil prices going down, and you'd think that should contribute to rates coming down eventually. But right now yields are still relatively showing resilience. And this recent breakout that we've seen may attempt to be able to pull some rug off some markets' feet. And this is going to be one headwind that I think we have to keep an eye on. I've also, earlier in the day, I was looking at prices of commodities like coffee, rice, and many of them have actually climbed up in the last couple of weeks. And maybe this could be a potential problem, again, keeping rates relatively lofty. So right now, that's one major headwind, I think, including the strength of the dollar, that could adversely affect our market. And those are two particular risk points that we have. And if I may finish into the US market,
Go ahead, sir.
despite what we've been seeing, the US market has been quite strong. The consolidation it did earlier on was its small type of correction already, and it prevented itself from doing anything weaker than that. So far, so good. The hold is maintained into the S&P. And even the all country index you see there on the right side is also attempting to be able to end a small consolidation, which again could contribute to more upside conditions. Now, admittedly, though, if you look at a more diverse foreign market perspective, you're going to see a lot more diversity there. There are countries that are still stronger than what I've just shown you now, and there are countries that are actually doing much weaker. Like recently, Hong Kong, China also fell down. Indonesia was also relatively weak. So, I mean, you're going to have to be able to watch markets very well. And I think because some markets are correcting, and as April pointed out, you're talking about the Philippine market that's relatively or quite attractive in valuation. It could be the reason why some people who are taking their profits in one country are moving to countries like ours and generating a little bit of an interim rally until we see some narrowing of the spreads between valuations of such countries. And that could explain why we're seeing some movement here, despite not all countries doing the same as of the current moment.
Okay. So I'll ask this next question to both our experts. No? So given everything we've discussed so far, could you share your overall strategy for the second half of the year? And if you want to share your top picks also for the second half. April, you want to go first?
Okay, so for me, I already talked about this in my calling the shots. Well, kasi before the peace deal was or the MOU of the peace deal was signed, I had a very defensive portfolio recommendation. But now I think it's time for us to increase exposure to cyclical stocks, and I'm still maintaining that view. But I think to make it a little bit more defensive, notwithstanding everything, when you buy your cyclical stocks, focus on those with higher dividend yields. Because, in a way, kasi, di ba, ang dami nating risk pinag-usapan eh. So, anything could happen. So at least, you have some protection in case prices don't go up. And then finally, given all the risk that is happening, I think there's a place for some cash, and also with the high interest rates prevailing right now, you could actually earn something from your cash. It's not like you're keeping cash and it's not earning anything. You could put it in money market or, diba? So may yields pa rin naman. Okay, so for the stock picks, let's go to the next slide. I actually come out with my stock picks every month in my Calling the Shots report. So guys, that's something that you could monitor on a monthly basis. But I think the major change that I would like to highlight for this round is that on the REIT side, I changed my recommendation. Previously, I was recommend to A REIT and M REIT. So the reason being is, first of all, we don't have to be so defensive anymore. And C REIT's dividend yield is very low at only 6%. I think the company had a stockholders meeting where finally they're gonna have an asset injection, but if they're gonna do that, most likely the share price will go down, because that's usually what happens, diba? If you do a share placement so that you could do an asset injection, you do it at a discount. But you see, A REIT has been sold down because of the share placement, and it hasn't recovered yet, which gives it an attractive more attractive 6.8% dividend yield. And then M REIT, I think, closed lower. As of Friday, dividend yield is 7.6%. So they'll also be having an asset injection, and now they actually have room to accept those asset injections. So it's very attractive. And then for cyclical stocks, we already talked about them: BDO, MYNLD, Globe. And I just want to highlight for MYNLD and Globe, aside from just being cyclical stocks, they also have some interesting bottom-up stories. So MYNLD is having a the turnaround of its meat alternative business, which they're now calling a protein business because that's what's trending right now. And they also have a potential dividend of around 6%. Okay, so the turnaround of that meat alternative business is a big thing. And then for Globe, of course, the IPO of GCash, which will unlock the value of one of its subsidiaries. So yeah, so GCash is it owns 34% of that, and right now that accounts for more than 20% of their profits. So that's really very exciting. We increased our target price recently on Globe to reflect that. So those are the positive things on those two companies.
All right. Thank you, April. So I really noticed, no? So just the average dividend yield, for example, it's about like 5 to 6%
Yeah.
for the whole basket. So which is very, very good. And notwithstanding the big upside that's noted here.
Yeah.
So thank you, April, on that. I'm sure we're gonna talk about a lot of the individual names also later on. For now, I'll ask Sir Juanis for your general strategy for the second half and maybe some top picks.
Okay, so I think given the context that we are looking at coming off a June to July turning point, that should be able to play out several trading strategies that traders may be able to take advantage of. And well, structurally, you'll probably see a lot of swing trading opportunities, and especially in stronger issues like the Ayala Core Rally, CNPF, AEV, Globe, ICT, IMI, MY, just to give some samples. So at least some people can spot out right away what opportunities they may have. And entries from this would be pullbacks to the 20, 50-day EMAs and then rebounds from there. Then you can go ahead and make your entries. And then you can also see some movements like tactical movements from some consolidating stocks that might be able to rally to the high band of the range. And who knows, they might even break out and extend this a little bit more. I think most of the banks are there, BDO, BPI, and Metrobank. Then CNPF, I would also put this there because some people have been arguing that maybe they're actually doing a consolidating review, but to me, they were more structurally strong, so that's why I put it to the first one. But if you want to trade it like a consolidation, fine. I'll show you a sample. Then, of course, Ditto, DNL, FGen, Jollibee, Metrobank, uh, Meralco, Megworld, and Monde are also in the categories. And I think April has quite a bit of the names I've also listed down here. And then, of course, we also have the opportunities for what we call mean reversion swings. So these are oversold stocks that have come really way down and are now showing some ability to generate a base and may generate some recovery rally as well. And that would include issues like Ayala Land, AP, Apex, Manila Water, SGP, and SPNEC. Although do understand that in terms of strength, it's the first group on top that are stronger. The ones in the bottom may rally, but then you might see the need for them to enter into consolidation after. So you really want to be able to limit that very short term trades only because you have to understand what the tactical range trade. And then may I have the second column shown, please? All right, and looking now into the longer term as to the September to November period, because we're looking at a potential turning point then, maybe if the index does hit 65, 6650, you might expect some friction coming from here because profit taking will more come in. You'll see a few zigzag behaviors also come out. Rotation will come in as well. So you might get a lot more movement coming towards this particular period. Right now, I think we'd be extremely lucky if we can go all the way up to about 7460 to 7560 in this third quarter. I think that would be a high stretch. I wouldn't say it's right now. I think just use first a projected September to October potential turning point as your ability to do some profit taking, and then wait for the pullback because that's when, of course, new trading buys will obviously come from that. Again, I just want to make sure that everybody understands that we're still in a large consolidation. Rallies may be existing on borrowed time, and that they would have a finite advance very much in time. So you're supposed to turn around to lighten when you see prices head back into the resistance range. May I have the next slide, please? So if I could just be very quickly on sample. So here's an example of what strong issues would look like. I have ICT here on the left and Mega White on the right. Again, very strong. And if you notice the pullback that ICTS did after it hit 995 pesos. So in a move like this, my move is don't chase this issue. Wait for prices to correct somewhere between their 20 and 50-day moving average. And if you notice what it did, ICT did pull back within that range, only to find some support and then recover again. So if you were to use that in Mega Wide here on the right side, I wouldn't just enter right now, would wait for major corrections to come in somewhere between the 20 and 50-day moving average, base out, and then after it shows that it's holding support, and then you can move around for a potential entry there. With regard to consolidation, can you go to the next slide, please? Here's an example of, I put CNPF here on the left side because some people were arguing that, although it is inching its way up, it's doing so slowly that it's actually a confined channel. And this is actually can also be said to be a consolidation at the same time. So if you are attempting to move to something like this, because the range is very small, you just wait for prices to back off to the support line, which is your trend line, there, and then after an acceleration side is example of a stronger consolidation. As you can see, it's now attempting to challenge to punch through. Then that consolidation could work itself into a stronger advance and could provide an opportunity. So, and a double low, the second low being a higher one. For a mean reversion, when we say mean reversion, what it's trying to do is it's trying to rally back to the mean range. It's not trying to rally back to a new high. So if you look at the mean range for major resistance and major support, somewhere in the middle, or the mean of that would be closer to 1460. And right now, that would be the best case scenario to look at. So you would be buying closer to where you are now with a projected move back into the middle of that range for a completed mean reversion swing. If that percentage-wise shows you adequate upside, then you can go ahead and take that opportunity. Here on the right side, we have Synergy Grid because it started a corrected move and started to break its 50-day and turn downwards. So now I'm waiting for a potential buy situation if prices can show a bottom near the next supportive level between 25, 30, and maybe 22. And if that does something similar to what Apex did, in other words, head downwards, then bounce over that support, then a mean reversion rally would mean it can recover back to where it is, maybe with a range of about 26 to 28 pesos coming from 22. And that can be a potential opportunity. But again, this is a short-term mean reversion move, not a move back to an upward trend. And different strategies within this short-term rally.
Okay, I think we need to wrap up this segment of the program. But before that, I'd just like to ask for a quick summary of your view or your market outlook for the second half. So, April?
Sorry, kahit quick, ang dami. Ang haba. But anyway, I just want to tell investors to stay constructive on the Philippine market. This is despite the extremely volatile geopolitical environment that we have. Remember, historically, markets were able to rebound. As oil prices, I think the focus is let's look at oil prices and it stays weak. If it stays weak, the market should be able to rebound because there are already signs that businesses and consumers are becoming more optimistic because the worst case scenario didn't materialize. And of course, we're very positive on the GCash IPO, and we hope that it will be successful because we feel like it could cause or could help the market re-rate. And finally, valuations. I think it's very, very good that you highlighted like significant capital appreciation potential plus the potential to earn a dividend yield averaging at least 5+%, at least for those stocks that we recommended. So worst case scenario, you get your 5%. Best case scenario, you get both your 5% and your capital appreciation. And then let's go to the next slide. So yeah, I have a next slide.
Next slide, please.
Yeah.
Might be lagging. Sorry.
Yeah, but anyway, I think for the next slide, I only talk about the risk in the stock picks. Yeah. So if you're worried about them, for example, on the geopolitical situation, our base case is that the US and Iran, maybe they will do these heated exchanges, but at the end of the day, they will not go back to the level of aggression we saw in March and April. For the Fed and the BSP, well, eventually, I feel that they will not be aggressively tightening because of the, weak labor market. The major risk at this point, as far as I'm concerned, is really what would happen to the global markets because we will be vulnerable to contagion. But for now, I think it would be a good idea to turn more, I guess, to take on a little bit more risk by buying more cyclical stocks. And if we want to protect ourselves against risk, maybe, to have more high dividend paying issues and to keep some cash as dry powder. So this cash is more to take advantage of opportunities. Okay, so don't remember to deploy them when the opportunities come about.
Okay, thank you, April. Sir Juanis, for your quick summary.
Okay. May I also have the second column shown, please? So try to be as brief as I can. So at least the trend status right now is we're seeing of a very wide rectangular pattern, the index. We're seeing what I'd like to call a resuscitation rally. And I'm hoping that this resuscitation rally, though maybe choppy, can try to exist all the way up closer to the next major turning point of September or October. Given these particular conditions, I also see that momentum indicators are still positive and they're not overbought. So that means there could still be some room to move into that short term. And keep your eye on the next major support and resistance areas. And as a potential target into the first resistance zone will be that range from 6.5 to about 6.50. And maybe after a pullback, and then we may actually have the ability to look for the ceiling of that multi-year rectangle, which is close to 7.460 and 7.560. And that should be able to give you a guiding premise on what to do and how far that we can take this market, at least into the short term, so that you know what your ultimate range is. But just keep in mind, as things are being shown to us, we're still stuck in a consolidation, and that means your market breadth tells you that there's lack of institutional following as of yet, and may need more to go on to show you a much broader swing trade upward. So, like I said, take advantage of what you have today. We are turning a chapter from weakness that we saw in the first half, headwinds to be able to lighten down. But also, there is one more chapter to end before the year ends. So just be prepared that we have to be able to take advantage of taking some profits whenever we see an extended run take place towards the third quarter of the year.
Okay, thank you, Sir Juanis. Now, okay, so as we move to our next segment, I'd like to invite everyone to submit your questions in the Zoom Q&A tab if you have one. I'd like to also thank our analysts from the COL research team who are here to help answer some of your live questions. For the next part, we've compiled a list of most requested stocks from our clients. So for each one, I'll be asking our experts here whether they like or dislike the stock by raising their paddles. Okay, so but before we begin, I'd like just to note, because April will be basing her views off of fundamentals, while Juanis will be applying a more technical perspective, right? So it's like what to buy versus when to buy. Of course, this could lead to some differences in their answers. So just to help make sense of these cases, I'd like to note, no? So if, for example, April likes likes it fundamentally and Sir Juanis does not like it technically, then it could mean that while the outlook is positive, it might not yet be ready. Conversely, if April does not like the stock fundamentally, while Juanis likes it technically, it could mean that while the stock is showing strength presently, which could drive prices higher in the short term, the sustainability of the rally might be in question. So just to help you guys make sense of the next part, no, just in case there's some discrepancies in their answers. Okay, so let's begin with the first stock, the most requested stock. Of course, it's Jollibee. I'd like to ask our experts, thumbs up, thumbs down first before you give your quick thoughts. Thumbs up, thumbs down. Okay, both thumbs up. Quick thoughts lang on the stock, why you like it, April?
Yeah, I think for Jollibee, it should benefit from, falling oil prices, falling commodity prices. So that should help improve sales, improve margins. So maybe the sell-off was due to the bad first quarter earnings and the potential impact of the war. But I think the good news is in the first quarter, um, the volume growth was still there, and hopefully, with what's happening, that should be enough to, allow profits to recover.
Okay, Sir Juanis?
Well, I put a thumbs up because I did see a downtrend line break, and that tells me that more likely it's generated a major base. So now that it's in rally mode or a graduated rally mode, you might still seeing an upswinging channel there, but do understand that you might do see a channel, which means that it will zigzag its way up and more likely not just jump up right away. So anticipate some volatility there, looking at 157 to 177.
So, Sir Juanis, after a breakout recently, what's a good entry point for this stock?
Oh, well, right now, as long as it stays above the 20-day moving average, it's currently at about 140. That would be a good area to be able to look at. That's also the breakout area. So you don't want it to go back in too much. So if you do buy there, the maximum, I would think this would even do a repenetration would be somewhere closer to 130. Put a stop there and then try to ride out the volatility back to the higher areas of resistance.
Okay, thank you. Let's go to our next stock, Ayala Land. Thumbs up, thumbs down? Thumbs up, both of them again. April, do you want to go first?
Yeah, I think notwithstanding what, all the negative publicity, it's crazy because this stock is actually below book value. Really very cheap, single digit PE, which I never thought would happen to Ayala Land. So I think the problems that are being highlighted by the market are not as worrisome as they say it is. May pagka-sensationalism, no? And yeah, there's a lot of bad things happening, but I don't think it should be valued that way as far as Ayala Land is concerned.
Yeah. And there's also, correct me if I'm wrong, there's also a recent tweak or
Oh
policy
yeah,
tweak
yeah,
for
yeah.
the
Oo.
Pag-ibig
To
loans,
10
right?
million
Which so
pesos.
could it be a
Yes,
potential
oo.
catalyst also for like the property companies in general or even specifically for Ayala Land?
I think it could help on the
Mm.
lower end projects,
Wow.
but honestly, if you do the math, mahirap pa rin siya because realistically, what can you buy with 10 million pesos? And for you to qualify for a 10 million peso loan, what kind of a monthly income should you have? Which is really huge. If you have access to, I think David Lichu kind of talked about it in his presentation. He was saying something like somebody has to be earning 160,000 a month to qualify for that loan, no? Kasi malaki pa rin ang monthly amort eh. So it
Okay.
will help, but I don't expect it to be like yung parang next month or next year we'll
Yeah.
see, doubling, tripling of sales. Baka hindi naman, but it
Yeah.
will help.
Okay. Thank you. Sir Juanis?
Yeah, well, same opinion as what I showed in Jollibee, downtrend line break. So that tells you a major low has been generated. And I think here more clearly, you can see the cascading motion it's doing into a rally channel. And hopefully more cascades come in, but looking next between 1670 and 19 eventually. But please remember, as Rome was not built in one day, so can Ayala na not build its rally in one day.
Okay, very well said. Okay, we're gonna take the next three stocks as a group, but let's show them first one by one. So let's go to the next one. I think these are three banks, no? So BDO, BPI, and Metro Bank. So first for BDO, first I need your thumbs up and thumbs down for the record. So for BDO first, BDO both thumbs up, and then for BPI, so I'll ask your explanation in a while, okay? So BPI also both thumbs up, and then Metro Bank for the last one, also both thumbs up. So far lahat thumbs up. So that's good news, right? Okay, so let's go to BDO first. Okay, I guess let's go to April first. If you could give your quick thoughts on the three, if you'd like, or highlight one or two,
Yeah.
up to you.
So, 3 na lang.
Okay,
Kasi
go ahead.
medyo similar naman yung galaw. I think for the three banks, if you look, okay, they were sold off, if you look at it. Kasi I think the reason for the sell-off was that, because of the war, there are concerns of more defaults. And because of that, also in the earnings season, we saw a lot of banks setting aside a lot of provisions. So may ganung factor. But since the war is over and oil prices have not shot up as much as people thought they would, if you look at the underlying operations, mukhang malakas naman. So I guess yun nga, the worst case scenario hasn't happened, and the core lending operations remain very strong, which is why it's just right to turn more positive on the banks.
Okay, okay. Sir Juanis, for the
Okay,
banks?
in a sense, yes, I think all the three banks look relatively similar, although not identical, with Metrobank maybe being a laggard of the three, and BPI being the stronger one of the three. But nevertheless, I think accurately we probably see more of a recovery conditions back. I think I've indicated all the red numbers you see above the prices are your next resistance points. Hoping that in BDO's case, we can go back to 133 to 140. In BPI's case, maybe 109.30 first and eventually 121. That's a decent move. And then Metrobank, the laggard, this one a little bit more of a challenge because it has to punch over 67.95 and 69.35 first before it can show into wider upsides. But I think eventually it'll get there. I'm just trying to see whether it might take longer to base out as compared to BPI and BDO. But still, I think these are good range trades moves by these banks on movements to support.
Yeah. Before we move on to the next one, I'd just like to note because our banking analyst, so some of you might be wondering about the impact. The banking analyst recently wrote a report, no, estimating the impact to income to be about like 1 to 3% of each bank. So it's manageable. It's not that big from an earnings perspective. So that should help probably sustain the rally, hopefully. Okay, so let's go to the next set of companies. So the two telcos, Globe and Tel. So first one, Globe first. Globe first. Thumbs up or thumbs down? Both thumbs up. So I guess we're very bullish today. Okay, how about for PLDT? For Tel? Thumbs up. Okay, also both thumbs up. April, share your thoughts.
Yeah, so for Globe, I already talked about the benefit of the GCash IPO. So, yeah, but over and above that, during the first quarter, Globe actually performed very well, even its mobile business, broadband business. So it outperformed PLDT very much. So I think those are the catalysts for Globe. And then for PLDT naman, okay, its first quarter earnings weren't as good. But that said, I think the valuations are crazy cheap right now. Dividend yield of 8.3%. Globe is like 5 plus. So sa dividend yield. Tsaka, okay, it also has Maya, which it plans to list. Um, so again, Maya is not as big to PLDT compared to GCash is to Globe. Because I think GCash right now is 20+% or 30, something like that. In terms of earnings contribution, I think Maya is less than 10% and the growth isn't as fast. But nevertheless, okay, I think the difference with PLDT, the strategy I think they're pursuing is right now monetizing some of its non-core assets and using the proceeds to pay down its debts. Because if it pays down its debts, they will save a lot on interest expenses. Eh, di ba yung top line niya is a low single digit type of growth. So one way by which you can grow the profits is by monetizing these assets that you have. So aside from that, of course, it has the Vitro IPO, which may happen in September, October as well. And aside that, they have the mga copper assets again that they plan to sell. So they're actively looking for ways to monetize these assets, pay down the debts, and so focus is more on sustaining the cash dividends because I think they kind of recognize that they can only grow so much at this point.
Yeah, so but just sustaining the cash dividends of 8.3%, if they
Yeah.
can do that, I think that's already very healthy.
Yes.
Okay, Juanis, would you like to give your thoughts for Globe and Tel?
Well, I'm actually more in favor of the globe chart than PLDT, though I did paint both into a green. In Globe's case, I'm actually waiting for a buyback condition closer between 1820, which already just recently hit, all the way to about 1760. I think these are viable areas to be able to look for entries for Globe. So we're coming near that area. So similar to what I pointed out earlier in ICT, this is the same kind of movement you're doing, and so we're I think around the corner for an opportunity for potential entry for Globe before a recovery swing. But what I want to highlight is remember the kind of market we're in. Rallies like this very big rally you saw in a breakout. Again, the market is not in that situation where it is a momentum based situation, right? So since there is absence of momentum, you'll easily see these very sharp, aggressive movements peter off and get corrections like this. So please just make sure that your entries are closer to support and not coming in once you see hefty spikes like this. This is not for an entry period of this type of market. With regards to PLDT, I'm a little, although I did put a thumbs up on this, I am, putting my fingers crossed that 1184 resistance will break eventually, especially since April, I pointed out, we do have a catalyst coming up towards the third, fourth quarter. And of course, dividend pronouncements are still relatively good. I think those should be enough to be able to justify the major low for Peaker. Things that I would like in the entire list of stocks we're picking right now in the most requested.
Yeah, so like a qualified thumbs up. All right. Okay, so next one, AC. I believe we have AC. Okay, thumbs up or thumbs down? Still both thumbs up. April, your thoughts?
Yeah, for AC, it's more of AC being a beneficiary again of GCash because it owns directly it owns around 6.5% through the 50/50 joint venture with Mitsubishi, but on top of that, it also owns around 10% through Globe because they also own shares in Globe. So yeah, the stock is just too cheap. So in other words, it's a value stock with a catalyst in the short term. But again, most of its subsidiaries are already listed. So in a way, prefer to buy the subsidiaries, but then because the stock is so cheap and there's a catalyst, it could go up.
Yeah. So valuation plus that potential catalyst. Sir Juanis?
Yeah, well, I agree also with April because the potential catalyst also generates the activity that we saw recently. Uh, I'm I'm looking at better entries between 465 and 445, which I marked out there as the next major support. That should provide a better window to enter Ayala Core for a resumption of this rally back to either 514 or 550.
Okay, thank you. Let's go to our next stock. ICT, everybody's favorite, the favorite now in the market. I think Sir
Are you
Juanis, you
sure it's
mentioned something
everybody's favorite?
uh, okay. um, I think a while ago, Sir Juanis, you already mentioned something about this, but nevertheless, just for the
Yeah.
record, let ask thumbs up or thumbs down. Oh, okay. Finally, we have the first split. Okay, so Sir Juanis already mentioned about the technicals a while ago, so I'll
Yeah.
probably skip that in the interest of time. You mentioned that's one of the stronger names. You're waiting for pullbacks. For April, why don't you like it?
Yeah, so talagang pinag-usapan namin ng analyst natin. Because okay, so ICTSI has performed consistently very well. The question is, the valuations. Kasi since it's been doing so well, I think people just buy it and keep it, because they feel like that is something that can last forever. But the problem is, this is highly dependent on consistent M&As, consistent, successful M&As to the point that they can consistently grow at a double-digit pace in the next few years. And if they don't do that, it's hard to justify the current valuation. So it's more of that, rather than we really don't like it. Because based on what we can see right now, it's hard to sustain that momentum unless, they succeed in buying more.
Okay, so if I may know, and also in light with how I explained it a while ago, if for potential differences. So because Sir Juanis likes it on the technicals, it could mean there's some more opportunities in the short term, especially if it gets closer to your support areas. You could buy and trade it. But the moment I guess that you see, I guess trendline breaks, we really have to be very diligent. And also not just trendline breaks, but if you see like in earnings, for example, if they report earnings suddenly that's like below expectations, which hasn't happened yet for the last like 2-3 years. But if it happens, then you really have to be careful because maybe the trend could reverse then. Okay. So next one, let's go to Semirara, SEC. Thumbs up or thumbs down? Okay, both thumbs down this time. Okay. April, your thoughts first?
Yeah, so we talked about Semirara in our weeklies, and the major issue is that it lost its coal operating contract. And the thing is before kasi the story was for them once they win the contract. The problem is, 'di ba ngayon sinabi ng DOE na okay, we're also going to include some financial consideration for this contract. And secondly, during the pre-bidding conference, we know that San Miguel actually is interested. Okay, Meralco kind of stepped out and said, okay, we'll just work with Semirara, but San Miguel seems interested. Okay, and San Miguel has a track record of bidding aggressively. So the concern is that, dati kasi pag nanalo si Mirara, o di back to the previous the problem is if they bid to win, they might be paying a lot. So if they lose the contract, uh it's a big hit to profitability of Semirara because I think more than 50% ang tama sa P&L nila yan if they lose the coal operating contract. And of course, because even though it has power gen, the power gen uses the coal from the Semirara coal operating Semirara Islands. So the impact will be very substantial, and this stock is a very I think a very popular dividend stock. You have to remember that Semirara cannot pay out those cash dividends if it loses the coal operating contract.
Okay, thank you, April. Sir Juanis, your thoughts?
Okay, so the move for Semirara still, although it still looks quite negative because all trends are pointing downwards, short, medium, long. And about the only good thing I can say, it's coming closer its previous low at 2120. I hope that can drive some sort of a technical rebound. Your MACD is very negative, and that tells me, although we are reaching oversold levels, a rally here will be a short-term rally only, and I think that'll be an opportunity to sell if you can get it between 23.25 or luckier if we can go higher to 25.15. I'll use that as an opportunity to lighten first.
Okay, thank you, thank you. So normally we'd have 10 only, and that's 10 already, but for this round, since we got so many requests, so we extended it to 12. So habol lang natin konti. Two stocks. First one, Meralco. Thumbs up or thumbs down? Both thumbs up. Okay, April, go ahead.
Yeah, I think many reasons for the stock being sold down. First, the first quarter earnings, they talked about distribution volume actually going down, di ba? I think 1.8% for the first quarter, which is kind of worrisome. And aside from that, the tariff reset was delayed. But right now, we are seeing some offsets. For example, on the sales volume, the company disclosed that the second quarter sales volume actually improved, up by, I think, 0.6%. So at least nag-recover na yung sales volume. And then the tariff reset is just a delay, no? It's not a cancellation of the tariff reset. And with, of course, oil prices going down, I think the likelihood of the government not granting a tariff reset is much less. So, yun, I think okay pa naman. It's actually an opportunity because Meralco is one of those stocks that we always felt was expensive. That's why we didn't recommend it as much. And by the way, the company has the Terra Solar Power Project, which is the Espinec project, which is a huge project that will come online this year. So that will help earnings growth in the second half.
Yeah. Okay. Thank you. Thank you. Sir Juanis?
Right, so Morocco looks like it's trying to build a more viable support base because it's generated a higher low at 570. But down the road, it still needs to break 593 for me to offer a trading buy. If you want, you can try to be able to be a bit more aggressive by buying closer to that 570 and putting a stop below there or at 554, and then just hanging on to see if it can break out and then attempt to be able to wrestle itself back up above resistance. Potentially back to 620 to 640.
Okay, thank you. And for last one, Manila, thumbs up or thumbs down? I see thumbs down. Okay, okay. Share your
Okay,
thoughts, please,
so
Madam Cooper.
for MYNLD, I mean, it's a utility company, and I think one of the, I mean, in a way, you can measure the type of growth that they will have. So we feel like it's already priced in at this point, and maybe the reason why it was so strong because people were expecting it to be added to the index. And based on our computations, or at least the analyst computations, it looks like it really will be added to the PSEI index. So maybe, it's more of a value kind of thing. It's like we think the positives are priced in.
Yeah, this is the August rebalancing,
Yes, the
right? The
August
August, yeah, okay,
rebalancing
the
of the
upcoming August.
PSEI. So if it rallies this August, it could be a good time to at least lock in the gains, take profits for the meantime until, something else goes on. There's some positive developments for the
Yeah.
company.
Yeah, so thumbs down, but maybe may last chance pa to maybe take profits. Should it really be included and should it be bought up? Okay, Sir Juanis?
Yes, so thumbs down because as of right now, the technicals still don't look good. But 1890 is a major support for MYNLD, and I'm really hoping that this could stage for that particular bottom that can generate a pre-August rally. But I haven't seen that happen yet. So for right now, the best I can say is just range trade this issue. For the meantime, that means buying closer to the 18, 19, 19, and then maybe try to square it up between 21 or maybe just a little bit higher than that. But I think the downtrend that you would see there would eventually keep it depressed into a consolidation.
All right. Okay. Thank you, April and Juanis, for your thoughts. Please note that these views. So let me pull. I think we can pull up the summary, right, of their thumbs up. Yeah. Okay. There we have it. But as you take a picture or note it, please note that these views are based on what they see as of the moment and could potentially change with new information. Okay. So if you'd like to stay updated with their latest views after today, you could see it in April's Calling the Shots report, which is published monthly, and Juanis's technical spotlight. Right. Of course, April also has her YouTube channel, so if you guys want to follow her there, Intelligent Investing with April Tan, please, I'd encourage that also. Okay, so thank you again. Let's now move on to our Q&A segment. Let's first go through some of the advanced questions that we got from our clients that you already submitted. And then after that, we'll go to the live questions. Okay, so first question. With all the uncertainties, what is the possibility that the PSEI will end the year strong? So from Yolando and one other. So April, you want to go ahead?
Yeah. Yun na nga eh. I agree there are a lot of uncertainties, but again, I just like to reiterate what I said. We don't need for everything to be perfect because if we look at the price, everybody's already expecting the worst. We just need things to be a little less bad. And looks like it will be less bad because there are, again, the green shoots na nga. This time around, the green shoots are the more optimistic sentiment of businesses, lower oil prices, and I would say even the wage hikes of consumers because if they have more money, they can withstand the higher prices.
Okay. Sir Juanes?
Well, I would just try to phrase this better because when they say end the year strong, do they mean it's closing on an upward note? But let's say if the index manages to go back closer to about 650 and not the major ceiling of the major rectangle, that could still bring the index to a close of about up 9 or 10%. And I hope that that qualifies as the strong nature of what they're talking about. But like I said, I'm a little bit more doubtful that we're going to go to the higher ceiling target with only a 20% possibility of that happening.
The
So
high,
I
the
hope
higher
around
ceiling.
9%. Yeah.
Yeah. But the higher ceiling you're referring to 7.4 or
7.5,
7.3. Yes,
yes.
I know. Okay. All right, that's clear. Okay, thank you. Let's go to the second question. Do you share a view that global tech stocks are a related question to that is what are your thoughts on switching from Philippine to global stocks this year? So, care to answer one or two of them or at the
Yeah.
same time? April, you want to?
Yun na nga eh. Tech stocks are overpriced. I think, okay. We've been talking about this, but I think the major rebuttal to this, no, is a lot of, uh, di ba may mga nag-highlight, earnings are very strong in the first quarter to the point that analysts had to revise their earnings forecast this year and tech stocks are no longer expensive. But marami siyang nuances because a lot of the improvements is due to, I would say, treatments of financials, like capitalizing of interest expenses, treatments of depreciation, and then favorable tax laws in the US, which allow companies to immediately expense all of their for tax purposes, immediately expense the capex, etc. So medyo may daya, and of course, secondly, the semiconductor companies are really making a killing. But the thing is, semiconductor companies are highly cyclical companies, so again, it's not unusual that you'd see them, during the end of the cycle, earning a lot. But then again, we really don't know. But there are signs, as we talked about earlier. Yun na nga, how sustainable are these capex spends? There are some, quietly pulling back on these data center capex spends. And then, I don't know, some bears are talking about si Meta, di ba, selling some of the cloud compute capacity, which is could be a sign that, they're not gonna do it anymore. And then some companies actually rehiring people instead of going all in AI, di ba? Because these AI companies, if they're gonna list, they gotta show a pathway to profitability. So the tokens are being priced, I think, higher right now, and people are realizing, oh, it's not so cheap to use AI pala. Switching from Philippine stocks to global stocks this year, I actually want to highlight something. Charmaine, can you share my slide on the where we are in terms of the emotional cycle of, you know,
Yeah,
markets? Yeah. So,
I believe that's slide 23, if we can pull it up.
yeah, I just want to show everyone that there are some benefits to being invested in the Philippines, and notwithstanding how negative things are. Um, you know, um, if we remove Philippines and US and just think about this, reflect on this whole chart, you kind of agree what goes on when the market is strong. You feel great about your investments and you want to invest a lot, but then at that point where there's this feeling that nothing can go wrong, you are subjecting yourself to the point of maximum financial risk. And my feeling is, I don't know if we're there with the US, but we're closer to that. You can say, well, no, we're just in the excitement phase. I don't know. But the point is, we could be closer, we're closer to the top rather than we are to the bottom. And on the Philippines, we are definitely close to the bottom where, we're finished with the capitulation. We're in the point of despondency where people don't care about anything. Even if something good happens, we say, walang pag-asa ang Pilipinas. But then, that said, this is the point of maximum financial opportunity. And sadly, if you're gonna sell today, to enter the point of maximum financial risk, then I think parang mali ata. So maybe, a barbell type of strategy would be better where, okay, if the US is going up, as I have a little bit of that, but if again, as I've said earlier, the worst case scenario is you collect your cash dividends. Best case scenario is, prices go up and you collect your cash dividends. So yun lang. Kasi you can have good companies, bad stocks, di ba? You could
Yeah,
also have that case.
yeah.
So for the Philippines, you can have, good companies that are also good stocks. So that's why I wouldn't ignore it or sell it, and just switch all to US.
Okay. All right, Sir Juanis, any thoughts on these two questions? No? So global tech stocks being overpriced. If we could go back to the slide, please. But yeah, global tech stocks, whether it's overpriced, and switching from Philippine to global.
Well, I won't comment on being overpriced because that's out of my field of expertise. All I know is trends can stay in one direction extendedly, and given that context, is that it could be that it could continue to move on. It looks like into the semicons that there is a move to try to generate some short-term correction. I don't see a trend reversal as of yet, although we could probably see maybe an ABC type correction into the semicons, which would mean that you might see some corrective volatility in some markets that are heavy and such, and the US being one of them. Is it a bubble? Um, Again, I would say it's hard to say. As April pointed out, it could take one or two more segments before reaching that bubble. So I can't tell you in this next 6 months if that bubble will burst. But it does feel like something like what happened during the internet boom, coming when all the players became so big, and eventually you will see that industry narrow off, right? And there will be some clearly issues that will have to go through some tough times, but there will be one or two or three survivors that will continue to do that business after that. Now, switching, for now, I think yes, there might, as I've mentioned earlier, there are a few markets that are correcting and could be the reason why some shift is taking place to Philippine stocks. But coming towards the September, you might have to be able to do the shifting again, as some profit taking might be required during the Philippine market. If you guys want to be able to look at another market or a global fund that could come in after corrections of the semicon issues, then maybe that could be a potential switch. But then you would have to be accurately timing that. I think that would be a potential. But for now, I think try to take advantage of the Philippine recovery.
Okay, thank you, thank you. Let's go to our next question, please. Okay, what events or indicators should investors closely monitor over the next 6 months? April?
Yeah, I think oil prices definitely. Commodity prices, okay, I think that's something I didn't really talk about, pero I don't know if it's Juanis or if it's you, Charles, who talked about the commodity prices going up because of El Nino. I don't know if it's El Nino or because of the lag effect of the
Farmers.
expensive fertilizers, so they didn't plant, etc. But that could be a potential risk. But yun, I think oil prices would be the most important, and of course, whether or not the IPOs will be successful in the fourth quarter, GCash,
Vitro.
Vitro, and maglilist ba ang Maya, 'di ba? So those are things that we should take into consideration.
Juanis would like to add anything?
I'm watching two bond yields, especially bond yields continue to move higher. That'll be a headwind for markets. And second is, will the dollar continue to move up also? I think those two to me are more important. Oil, like I said earlier, might just have a limited upside, so I'm not too worried about that right now.
Okay, great. Short and sweet. Thank you. Next question, please. What are your insights on the upcoming GCash and Vitro IPO? So we touched upon this already a while ago, but if you could just give your insight, is it recommended? Do you recommend buying it, or at what price if you have a price, April?
Yeah, so GCash, I mean, fundamentally looks very promising, rapid earnings growth. And what I like about it is market. So yun na nga eh. Think about it like for example, the financial penetration of the Philippines has been stuck at the, I think, 20% level before, but because of the popularity of uh, e-wallets, fintech, we've been able to increase that to 50+%. And one of the things that these people who don't have access to banks also don't have access to is credit. So I think yun na nga eh. I think GCash has I think 90, so many millions of users. They can also use the the e-wallet to borrow money, and that's another avenue for growth. So I think may room pa for growth for GCash. I'm quite positive. The current PE, okay, 10 times, 10 pesos based on annualized earnings, that's 30 times PE, which may seem expensive, but not really if you compare it with the um, other fintechs that are listed. But that said, of course, um, if they can price it below 10 pesos, which is the maximum offer price, that would be the most ideal scenario.
Yeah.
No? For Vitro, again, at the maximum price, doesn't seem very attractive because the yield is not so high. Even though it's a data center thing, the problem is how are they gonna grow the cash dividends, di ba? Yun naman ang issue eh. So initially, they have capacity utilization, an increase in that would drive the dividends. But aside from that, the potential asset injection of Santa Rosa, which will of course grow the portfolio, but the problem is there is no certainty as to when that would happen. So if I view it from that perspective, I'm not so excited. Unlike, say, looking at our recommended A-REIT and M-REIT, there's a ready portfolio that just needs to be injected. So you can time it better, and I think the execution is cleaner, it's easier versus say a Vitro. So I'm not too keen about Vitro, if you ask me. At least not at this price, or not at the maximum price.
Okay, Sir Juanis, as a technician, of course, we still don't have charts yet, but how would you generally approach like IPOs, especially like popular IPOs? How would you approach them?
Okay. I think the more popular IPOs have a good chance of starting strong, or at least showing a lift off on IPO day, as I guess it's the job of also the underwriter to market these things well. But commonly, what would happen is they open strong, a sell-off comes in, and then a new accumulation phase will come in after that. So for those there are two types of people: those who want to take the gamble right before IPO and see whether it does well or not. My thinking is it'll probably open well and then have a sell-off coming through that, and then generate a new support base for new buyers to be able to come in. Please understand this is a very big offering. I'm particularly worried, as I said earlier, that a bigger retail base may come in to be able to try to participate here. Some may not be experienced stock investors and might just throw in their cash haphazardly, and that could generate a lot more volatility for this. So understand what can happen here. Normally, strong open, then base building comes in after that.
Parang SpaceX.
Parang.
Okay. Okay. Let's move on to the next question. Sorry. So, which sectors are expected to perform well in the next 6 to 12 months? April, would you like to give a couple
Yeah.
sectors you like?
Yeah, maybe more of the cyclical ones. And for the cyclical ones, I think the cleanest play would be the banks. Because for the banks, I think yung naging issue lang naman is concerns over NPL eh. So, provisions lang, no? But if you look at the underlying matrices like loan growth, net interest income, they were actually very strong in the first quarter. Uh, well, the telcos could be another strong contender because of the GCash IPO and the implications on them. And then finally, maybe shift to more cyclical issues, them benefiting from, say, improvement in consumer sentiment brought about by lower oil prices and the favorable impact on margins of lower commodity prices. Hopefully, that will be sustained.
Okay. Sir Juanis?
I would agree with April. I think I'd also lean in that. The only thing, as I said earlier, because one of the risks and headwinds that I'm anticipating could be a push up in bond yields. Just be watchful because some of those sectors may be sensitive to the upward movement of yields. So just be careful with those. But banks look okay. And of course, some of the utility company services are also okay for me.
Okay, great. Thank you. Next question. So I'm not sure if you're prepared for this, April, no, but who are the likely candidates to be included and excluded in the next two rebalancings, PSEI rebalancings?
Yeah, I think for the August rebal, it's Converge to be removed, replaced by
I need that.
By
MYNLD.
Yeah. I
Yeah.
think just ano lang, I'll just take this moment. No? So I believe you have a video, right, that recently
Yes.
came out just this week, I think,
Oo, so
regarding this
panoorin niyo 'yon.
specific question for
Because
August and for yeah,
yeah, this one kasi, the February, that's the tricky one because there are three possible scenarios.
yeah,
The first is status quo. Second is GCash will be included or not because the PSE adjusts the free float requirement. And then the third scenario is they don't just adjust the free float requirement but also the mTOR, median trading, whatever. Basta how
yeah,
they compute liquidity. So, maraming
yeah, many
possible
stocks.
combinations.
Yeah,
Yeah.
I believe just to highlight some of the names here in this webinar, no. So for the February rebalancing, some of the potential inclusions, potential lang because again there's so many possibilities, would be like SGP, AP, GCash if they make an exemption. Um,
And also
those
yung
three probably,
and
yeah.
also if kasi 'di ba remember you have to be listed for how many months pa 'di
Yes,
ba? So
yes,
hindi siya aabot. Pero what if nagmamadali si PSE, then they make an exemption, then they allow it to be
yeah,
included already in February. So many things that can happen. So yeah.
yeah. On the flip side, just to complete the list, no, so on the flip side, potential deletions would include like Plus, SCC, GT Cap, CNPF, China Bank also. So those names are possible. So I'm not saying they're likely. Okay, they're possible depending on what happens because February is still so far away. But again, that's the I guess the brief answer. But if you want the full explanation on it, just visit April's channel. Uh, yeah. So I think that's it. Sir Juanis, would you need to add
no,
anything
no.
to this?
Oh, go ahead. Let's go to the
Okay.
next.
Okay, great. So let's go to, I think this is the last question for our advanced questions. And I find this very, very important, no? So what key lessons did we learn in the first half that can guide our strategy for the rest of the year? And in general, if you have any advice for investors or traders. April, go ahead.
Ah, ah. Well, okay, I think for me I guess the key lessons would be not to be too bearish, to take advantage of opportunities like of stocks that are sold down. Because it seems like time and again, a buy low, sell high type of strategy seems to be working for the Philippine market. So maybe that's something that we can do. We can take advantage of because seems like we've seen a low already and happening.
Okay. Sir Juanis?
Okay, I was just actually reading the questions there on the left side, but I think they're quite material. Um,
We
I
can
think
go
the
through
answer
some of
to
them if you like. Yeah.
yeah, we went through them, and I guess the question is, what do you do when your portfolio's underperforming, right? And for I think in one guy's case for years. I think in as a trader, I let April handle the investor But as a trader, we do have flexibility to be able to rebalance ourselves out of issues that are quite difficult on our portfolio. Right? I don't understand the word called ipit. To me, I'm always a driver that can turn my wheel left and right to navigate myself out of weakness and more on prospective strength. And if you are a trader, I would suggest that you go ahead and do the same and rebalance your portfolio out of structurally weak issues and move to those that can recover faster. Because praying for a bottom might take exorbitantly long and might just cause unusual pain for you for a lengthy period of time. So, two hands on the steering wheel, turn yourselves towards success.
Okay, great. April, would you like to add anything else?
Yeah, I guess I'd like to add with to what Juanis said. Let's say you bought a stock and you kind of realize, oop, like it's the wrong stock. And then to the point na your losses are so big. Um, like I actually tell clients sometimes maybe you should consider switching. I mean, if selling for no reason is something that you don't want to do, there are a lot of opportunities right now. So maybe like just you don't need to add money to your investments in the stock market, but you can. One of the things you can do is actually sell it and then, switch to the stronger issues, those with better fundamentals. And I think in a way, psychologically it helps because hindi ka maka-move on kung nakikita mo malaki talo eh. I mean, 'di ba? Like,
Yep,
okay,
I know.
yeah, you
Yeah.
think about it because if you bought it at the high, even if the stock rallies, you will not realize that it's rallied and you're actually recovering because it's still way
Low.
below your initial purchase price. But, nga, let's, turning a new chapter. So you
Yeah.
can actually turn a new chapter by doing that, like switching from those stocks
Yeah.
to the new stocks that have better fundamentals, better technicals, and when your portfolio starts making money, then it should help you become more confident.
Okay, very well said. Nothing to add on my end. Okay, now let's move on to our live questions. I think this round we have more than 130 questions that I can see, on the chat. So I'd like to request from our experts to keep it a little short so we can answer as much as we can. Yeah. Okay. So first question, will the PAC Silica investment have an immediate impact on the Philippine economy? How could it affect trading activity on the PSE? From Peter.
Yeah, I think Paxilica is those investments, no, yung
Yeah, the
pro-US.
AI supply chain, I guess.
Yeah,
Yeah.
yeah. I think we're already seeing some of it. Maybe
Mhm.
that's why, they've formalized it. Believe it or not, our manufacturing sector is actually recovering.
Yeah.
Yun na nga, the PMIs are showing it already. 'Di ba, a while ago we talked about it. And then I was actually looking at the commitments for the mga PESA, whatever, and also the export sector. Kahit paano nauulanan tayo nitong mga tech, whatever, because the capacity is so tight to the point that and then of course, geopolitical situation is magulo. That's why we're seeing foreign investors actually coming to the Philippines. But, I think it will have an impact. The problem is like who are the beneficiaries in the Philippines? May mga nakalist ba sa PSE? Um, Not a lot. Maybe you have the likes of IMI, Ionics, very little and then they're very small. And the manufacture more, it's really such a small segment. Even FDIs on a Philippine perspective, foreign direct investments in manufacturing are still a very small portion relative to the whole.
Yeah.
Local investment is still 80%. So, sadly, that's the situation. It will benefit, but, we're still very early days at this point.
Yeah. Okay. Well said. Sir Juanis, would you like to add anything?
Nothing
Okay.
for me.
Okay. Next question, please. For stocks still in bearish declines, what bottoming signals should investors wait before attempting mean reversion trades from
Okay,
Jay?
I can take that.
Okay, go
All
ahead,
right,
Sir.
so I guess there's two things you want to look for. The first one is downtrend line breaks that can trigger a short-term recovery, and the other is a sample like I showed earlier. If you see like a double bottom that is also being shown, so that means you see first decline, a very short rally, and then it retests support, and it makes either a similar low or a higher low, and the next rally from that should offer you your mean reversion trade. So just keep a watch of those ones, especially if you can see the rally breaks off the 20-day EMA. These are all the signals you need to suggest that a wider rally is coming.
Okay, next question, please. How do you view the IRGC's influence in Iran? Okay, and the risk that it could disrupt or undermine any new agreement. No? So a little on the geopolitical side from JA. April, do you have
Okay.
any thoughts?
Well, talaga namang may influence sila eh. But I think the fact remains that, you know, in a way, okay, let's just rewind everything. Maybe in May, it didn't seem like there would be a peace deal. It was not possible, but here we are today. We have a peace deal because we don't know how difficult is as far as Iran is concerned eh. Uh, I mean, okay, they closed the Strait of Hormuz, but if you had checked what the commentators were saying or the political analysts were saying last year, 'di ba? They had this I don't know, 12-day war or whatever. And 'di ba binomba rin ni US si Iran, and then they attacked all these nuclear sites. And then it was just a weekend operation, and then Iran did not people were always saying that Iran could close the Strait of Hormuz, but they didn't, 'di ba? Because the Strait of Hormuz is really vital for them. They really need a lot of imports, like for their food. And then 'di ba then nagkaroon ng US blockade. So, the economic situation in Iran is really very difficult. So we really don't know what's going on in there, which may be the reason why they accepted the peace deal, or which, if you read about it, is really very, very attractive for them. So, so yeah, I mean, it's always a risk. Um, but on the flip side, like we don't know, kasi nagbe-benefit din naman sila on the peace deal eh. Like it's better for them to have the Strait of Hormuz open rather than closed, you know. So I don't know.
Okay. Care to add anything, Sir Juanis?
I think the best thing for you is to watch oil prices. I mean, it'll be hard for us to be able to guess because the parties involved here, some parties want the war to end and a party does not. And these are the conditions that you are in, and it might keep itself under turmoil. But if I don't see it hammering oil prices higher, then that means that the investor base is not being worried about this any potential disruption. But if you start seeing oil prices jump over $85, then I think that structurally would tell us that things are becoming more serious than what we thought they would settle down. Keep your eye on oil.
Okay, great. Next question. Next question, please. How should investor weigh growth in GCash or wait for direct opportunity to invest in GCash? Could GCash's growing profitability also support higher dividends for Globe over time? From Gerardo. April?
Okay. Well, syempre ngayon di pa listed ang GCash, so sa Globe tayo, di ba?
Yeah.
Yeah, but our view has always been, di ba, better to buy underlying stock than the parent.
Yeah.
Yeah, so same holds for GCash. Maybe if GCash IPOs, time to take profits on Globe, at least for the meantime, di ba? Um, Could GCash growing profitability also support higher dividends? Well, definitely. I mean, if GCash starts paying cash dividends, but maybe in the short term it won't, while it's still in a fast growing phase. But eventually, once the growth stabilizes, then they would be paying more cash dividends, and of course, that would improve Globe's cash position, enabling them to also pay more cash dividends.
Okay. All right. I think we can move on to the next question. What is your outlook for REITs in the second half of 2026? How could Vitro REITs IPO affect the performance of other listed REITs? April?
Yeah, I think for REITs, the main issue really is interest rates medyo mataas. Tsaka ngayon, there are concerns that it could go up some more. That's why maybe these REITs aren't performing well. But it might be an opportunity to actually, buy them as they're sold down. Kasi as far as asset injections are concerned, I think the at least I'm talking about the major REITs that have been okay naman. Si A-REIT, RCR, C-REIT, M-REIT, who else? Basta yun, sila. The more okay REITs, they have a pipeline of asset injections that will allow the dividends to grow over time. So if they're sold down to the point that they attractive dividend yields na like say mga 7%, I think it's a good opportunity to lock in. Vitro REIT, again, I've already said it, na medyo mahal siya. So I'd look at it if it could provide a more attractive dividend yield compared to the other REITs. But otherwise, I'd be more inclined to focus on the other REITs.
Okay. Sir Juanis, so what is it looking like in terms of technicals, if you could share?
I think with regard to the REITs, the Vitro REIT might not be adequately compared to the property type REITs. So just like C REIT can handle things as a different trend as compared to what we've been seeing in the property REITs, I think I would treat Vitro also quite differently. But I agree with April. I mean, keep your eyes glued on what rates are going to do or bond yields so that you can see how it would adversely or who knows, maybe positively affect the REIT market if it decides to go up or down.
Okay. I think we have two more questions. Okay. So we can show the second to the last one for today. With RHI set to the list, do you see other listed companies potentially facing a similar fate? So from Irene. So this one's quite challenging. What can we say, April?
Yeah, sadly, many listed companies are finding it very tempting to delist, no? Kasi I mean, from an issuer's perspective, being a listed company is quite difficult in the sense that you have so many compliance requirements. And then if your valuations are so cheap anyway, and it doesn't seem like the market is recognizing your
Value.
fundamentals, your value, then and you have so much cash, you don't know what to do with it anyway. You might as well just buy back everything and be a private company. Diba? So it is a possibility that you do have some companies that are working in the sideline. Well, for investors though, I think the silver lining there is when they delist, usually they pay a premium to the market price. Pay a premium compared to their price today. Kaya yun na nga yung mga yung a while ago, going back to the question where people are talking about, the huge losses they have. Maybe that's another reason why you may want to consider, rotating to other issues that have better fundamentals. Because otherwise, you would feel bad if a company privatizes and you feel like, I've still lost money since the IPO, and I'm gonna sell it to them like at a loss, parang 'di ba?
Sir Juanis, any thoughts on the listings in general?
Yeah, well, it saddens me as well. I guess. But if you look at other countries beside, we see there are a number of issues that are being IPO that are much bigger, even in Asia. There are a lot more there coming in. Maybe it should just really be an improvement. There will be some issues that will probably go through this fate, but try to be able to allow more companies to do IPO. Hopefully, that the regulations of which can also be simplified or at least lessened to be able to be more accommodating to that fact. But yes, I'm saddened by this, and I really feel for those investors who are not given a chance in terms of time to be able to recover some of the value they've lost by patiently sitting on this, and then in the end, company will buy back at a very very big discount from where they purchased. So I really hope it ends here, but I'm a trend follower, so it doesn't look like this might be the end.
Okay, great. Okay, last question from our audience. How should retail investors think about current market volatility? What's a common mistake you see retail investors make, and how can we avoid it? From Susan.
Okay, for me, my view is, let's accept the qualities of common stocks. Kasi I think one of the mistakes maybe some investors make is viewing that if I buy a stock today, it has to go up tomorrow. But stocks are very volatile instruments, but studies show that over time they provide superior returns. Therefore, how you should react to this is don't put money that you need in the short term to work in the stock market. This is more like, your long-term money that you're kind of sure like you're not gonna need for a very long time, then put it there. And especially right now, it really is a very attractive time to put long-term money to work because yun na nga, you can like worst case scenario, you earn your cash dividend, but best case, you also have your capital appreciation potential which would not be available, if we weren't in a difficult period of time. So you have to view the market that way when you buy stocks today to take advantage of the opportunities that are available.
Okay, Sir Juanis?
Also adding to that is, remember, I think I guess the danger is, for retail investors, especially new ones, is they really don't know which ones to buy, and they lack the experience to be able to run a thorough investigation of what they have to do. Many of them just speculate. Some people just look at ticker movements and they buy based on what they see in the ticker. Some people even say that they see, oh, today the stock went up 20%, so maybe it'll go up another 20% tomorrow, and they just buy the stock blindly. So I think being a more informed investor counts a lot in cases like this, especially in difficult markets such as ours. And also learn how to be able to broaden your scope. Instead of just buying one or two stocks, you can widen up to maybe about five. Or you might even consider looking into different funds that can actually be diversified on its own right away, and mix that with your stock picks. So, for example, maybe you can put uh, 20, 30, 40% into different types of funds, and then if you are a stock trader, maybe 60% of that you can accommodate in some of the special stocks that you like, so that you are not open to the heavy volatility as what the markets are showing, and just balance that off so that you can be present in key stocks when they're moving, and broaden it by maybe putting some funds inside so that you can lessen the impact of volatility.
Okay, thank you, thank you. So that is our last question for today. So would you have some final thoughts from our experts? Would you like to share any final thoughts before we end? April?
Yeah. For me, I just like to reiterate one of the things that I said that, you know, we don't have to wait for everything to be perfect for the market to go up. Things just have to be less bad than what people expect. And which is why, consider investing in the stock market today, notwithstanding the still negative backdrop that we have.
Okay, short and sweet. Perfect. Sir Juanis?
Yes, I highly agree with what April said. So I think, especially in markets like this, we are not in a perfect situation. We take opportunities as they come. And although they may not be looking at 100% tip-top shape, you will get outliers there. And if you do your jobs well and you are that informed trader or investor, I think you'll still see some opportunities that the market can bring out for you as long as you're very much watchful of those things as they come around. So take advantage of them. We've got up to now till September, October. Do what you can during that for that particular midpoint of the year.
Okay, great. Thank you once again, April and Juanis, for sharing your expertise with us today. Okay.
Thank you as well, Charles.
Yeah, thank you, Charles.
Okay, so before we formally end, I guess I was asked to also give my key takeaways for today's outlook. So let me just end with my, I'll try to keep it very short. No? So here are my key takeaways for today's webinar. First one is that the market seems to be turning more constructive. So it's not perfect, but it's more, there's green shoots, as they say. So like oil going down, there's also improvement in consumer confidence, business confidence, and even in manufacturing, right? And on a technical side, there seems to be a window, opportunity for short-term rally up until September, October, as Sir Juanis mentioned. No? But of course, second point is that headwinds remain. So there are still risks. We still need to be very wary of all these all these drivers like inflation, interest rates, the peso, oil, and so on, right? And then even from a technical perspective, the charts are still not as broad-based, the strength. So we still expect it to be largely range-bound. We still employ our buy low, sell high, and we still try to make sure that we're as disciplined as ever. Of course, most importantly, number three, so opportunity despite the uncertainty, right? Because I'm sure we've talked about so many risks today, right? So all the way from Iran to the US to AI to inflation, everything, all the risks that we have today. And of course, markets hate uncertainty. And I understand if this leads to some, fear or hesitancy to stay invested. But then again, I always believe, and I think our experts shared also, that there are still opportunities in spite or despite, or maybe because of this, right? So there are still opportunities given the low valuation, the high dividends, and some companies are just not doing as bad as they seem, right? So I guess what's important is to just go back to basics, right? If you're a fundamentalist, focus on strong earnings, companies with strong earnings. If you're a technician, make sure you focus on those with strong price action. So back to basics. I guess the last message is we just have to be more selective, we have to be more deliberate, and we have to be more prepared. So yeah. So with that, I'd like to thank all of you guys, our audience, for joining in.